Think we're good, yeah? Think we are good? Think we are good? Think we're good, yeah? Yeah, we are Gucci. Gucci. Go post this thingity thing. Thing. CPI tomorrow. There's a question. What the hell? How do I delete this shit? Oh, it's everywhere too. Give me permission, I'll ban them. Dan the man. Delete that. Probably delete the. Interesting. There's no way to delete that thing. Hook. Already updated our levels, so we are chilling. But in terms of getting caught up, I mean, nothing really going on, right? Nothing really going on. What's going on? Boom, 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 boom. But yeah, I mean, in terms of yesterday, where did we get off? It was before this thing, right? I talked about like maybe getting like this little bounce in here. Ended up getting it. So we took that a little bit of a potential scalp. Right at the golden pocket as per usual. Show to the math. Loading. Yeah, I mean, didn't end up breaking this level, right? And then on the downside, just kind of balance this stuff on CME, and now we're just kind of hanging out here. We'll see how CPI goes tomorrow. And I got my API for LOD fixed. Shout out to that. Shout out to Anthropic. Boom, boom, boom. Oh yeah, I got uploaded like the Robinhood thing, break even. I also shaved on this when we got up here. Shave some of this bitch, and I bought some. I went to McDonald's today, and I ain't talking no food though. I'm fucking McDonald's stock. It would open on this chart, right? Yeah, this thing's like potentially breaking out, right? Well, I was watching this thing and dying this morning. When we came down to build this and started going back up, I just bought some. We'll see how it goes. See how it goes. Got topped out, no big deal. Nothing crazy, not a huge position. Thing is, we missed some of the other stuff. Maybe not, maybe not. This thing's already kind of gone, right? Feels a little bad. Yeah, when we were watching Hershey, I think it gapped up last week, so it was like, fuck. Thing I'm wondering is like this thing. So I want to try and get in again later at a lower level. I haven't given it much thought as to where though. It really depends what's happening with this stuff. This is definitely looking super weak, and this thing is like changing structure, right? I'm curious to see how low this thing goes if like we get a major correction in, like in indexes. Not all this stuff finish. Okay. But I was waiting for this yellow box. I want to see what was going to happen down here. Didn't quite make it though. I'm curious if we come back around or not. We'll worry about that later. Give that some time. I didn't open a browser, fuck. What do we need to do? I get through these Discord messages. And I've been like fighting off, I don't know, like the flu or something for like 3-4 days now. It's like I'm getting sick, but I'm not like actually getting sick. I can't describe it. Like, my body's doing its best to fight it off. We're all done that. All done that thangity thang. How'd everything else close? Yeah, this thing was going crazy today. God damn. Right up the open, just never looked back. And it pulled back too. So we gotta go look up what this new ChatGPT just dropped like a new model or something, right? Same with Google, with Gemini, like a DeepMind research upgrade or something. What is that for? Bitcoins. Makes sense. Thing's almost there. This thing's almost down here. No, this is another one of those plays that Chris Camilo guy was talking about way back when. the sphere, goddamn. I think he even talked about it in one of like the original interviews he did. Like, yeah, like after going back and looking at those podcasts, is like another thing that he's talking about. That guy's a fucking juicer, we'll say that. An alpha juicer. Question is, we're gonna bounce here. We're not. Because we did have like 4-hour like bull dibs and whatnot printing. Same with like all the CBD. There's a bunch of like regular bull dibs on the CBD here. We were tapping this stuff on CME. Oh, we should look at some of this data, yeah. See how things are looking. Not particularly interesting. Seems like we're just squeezing out some shorts. It's the weather here. Like that's what it really is. The change of weather hits me. I'm not used to this cold. What else we need to look at? God. Why did this happen? This happened on my laptop too. They changed the fucking... Yeah, that's like, it's so annoying. Like every time you use this profile now, it defaults back to the regular settings, even if you change it. And it fucked up the session volume profile too. I don't know what they changed about that today, but it's been pissing me off. Pissing me off. But why? 688. Anyways. Trading view things, I suppose. I'm kind of fucking with this thing, right? Where is this? Because I don't know if they have a tape here. Or is it like a different like setting? Too high. Like how fast it is, right? And they released an API today. I might buy it and play around with it a little bit. I think it's a bit unnecessary, honestly. All this data is free. Like, I mean, maybe you have to pay for like a higher, like a call limit. But in general, you can pull all this info from like the exchanges. I'm curious to see the indicators people make, the community ones. Anything interesting in here? Cool stuff though, cool stuff. Yeah, if this thing wasn't only crypto, I'll probably use it, honestly. Probably use it over TradingView. I mean, it's definitely missing some features, but pretty good alternative. I'll say that. Also, like a lot cheaper if you're like someone that's trading crypto only. I think it's like half the price of TradingView, if not more. Or like if not less, I mean. Well, I will say it's a bit suspicious if you, I was like reading through their documentation for some of this stuff and some of like the open interest and liquidations seem a little suspicious how they're calculating that stuff. So we need to add some new alarms, right? We want to add the single prints. It'd be interesting to see if we can rotate up here, right? I mean, we did like open inside and like drop below, and now we're coming right back. Potentially. Because if we don't hold down here after like tapping this box, probably just gonna close along, to be honest. What's left of that thing? Yeah, the new Google model. Google. Today we updated Gemini 3 Deep Think. Okay. That's quite the jump. Oh, that's 15% higher than Opus 4.6. Holy shit, that's pretty high actually. I'll have to actually use it because like maybe they're like fitting for these benchmarks, but these are pretty fucking high scores actually, like significantly different. Especially because like these things, like to go from like 30 to like 80 on the testing is like, yeah, it's a difference. But to go from like 80 to 90, 90 to 100 is like a huge difference. So the fact that it's like getting into like this like 80 threshold and above, interesting. Interesting. Oh, I have to have like the I don't have this tier Google AI Ultra. I don't have that tier. Should we upgrade? Because I don't know if I'm gonna be using that a whole lot. Fuck it. Interesting. What did OpenAI do? I was reading it while waiting for my ultrasound. I think it's just like the same model, but it's faster for coding. Along those lines. GPT 5.3 Codex Spark, a smaller version designed for real-time coding. I will say that the ChatGPT Codex, I'm surprised more people aren't talking about this on social media. Because like compared to Claude, like the Opus 4.6, this thing is like pretty good. And you get like way more value out of your money tokens wise. Like I have this thing coding for literally for fucking hours nonstop, and I haven't hit the limit. I can't even hit the limit if I want to. If I had it running 24/7, I probably wouldn't hit my weekly limit. At least based on the rates that I'm currently going at. I've yet to see like using a significant amount. And I'm using like on the highest settings too. Like very high thinking. I don't need this anymore, right? Plus, the other cool thing about this ChatGPT Codex is the app. It's like a lot easier to like be coding like in VS Code or like having some error in terminal, and like it's integrated with the app, and you can just toss in screenshots and whatnot. When you're using Claude, you have to like put it in the repo basically. Pain in the ass. Pain in the mother ass. But what? My throat hurts so much, goddamn. God damn. What is this? Hmm. Boom, boom, boom. Okay. Okay. That doesn't seem worth it, honestly. Like maybe if we're doing some like just kind of redundant work, doesn't need much thought, just time, then yeah, I guess it's worth using this model, but oh yeah, fuck. I was trying to make a poly market bot, but I wanted to make it so I could like arbitrage between like poly market and Kalshi. But you can't use Kalshi in Canada. Go fucking figure, right? Go fucking figure. And I was gonna like run it on a VPN, but apparently you need to like KYC to use that thing. Pretty fucking annoying. Boom, 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 boom. Okay. I get some food. I'm hungry. I get some food, some cough syrup. Put on that lean boy. And on that walk. We'll kind of watch something and chill while we watch our little AI code away. Oversee this bitch. Boy, boy.
I've lost my mind, now I'm trapped inside a maze that never ends. I can't control these violent thoughts of schizophrenia. The madness has a grip upon my soul. I'm going crazy within myself. I've lost control, I cannot show it. So I choose to hide the stress. Spark this just to ease the pain I feel inside. But this infection always seems to still remain. I guess I'll never learn my lesson. Life's a bitch and then you die.
Wait, did we already watch all these?
No matter how many times.
I guess we'll watch this. Let chow down. And it's on volume profiles. Like, how interesting could this possibly be? Bum, 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 bum. Okay.
Technicals you use without volume, you're missing a major part of the picture. There's no one competing where you're playing the game. Versus here, the market's 100% going to react here. So it's really, really important to understand really what we call high value areas and low value areas. High value areas are literally just...
It's time to master the volume profile. This one indicator will show you exactly how people are positioned in the markets.
When we get to this edge, there's nobody here above us.
I mean,
So
we
think about
already
what
got
these
it,
markets
right?
are. What's most likely to happen as a trader is when volume comes into the market, it's going to be a massive change in structure because none of these prices are sticky. All of my executions rely on this idea of...
Please welcome this 7-figure trader, Forrest Knight. In this episode, Forrest breaks down his VPE strategy, using the volume profile to know exactly where to be positioned in the markets.
If you're looking for the candle for information, then you have to wait for it to close. You literally have to wait for it to close. This price here will never get retested if you actually wait for it to close. All of this is really just thinking of where people are positioned, how they would behave in an auction, knowing that
Forrest reveals the exact mechanics of the markets and how they operate, and then showcases exactly how to use the volume profile in order to be profitable and to have strong conviction in your edge.
people want to buy when prices are low, freak out when they're really red, get greedy when they're really green. They do the wrong thing at the exact right time because they're...
Welcome everyone back to Chart Fanatics, the go-to channel for all the very best trading strategies and concept breakdowns with the best traders in the world. Talking of which today, we have a very, very special guest. He's actually one of the co-owners of this incredible studio, The Move, but he's also an incredible trader. A 7-figure trader, a phenomenal trader who uses the volume profile. It is Trading with Forrest, aka Forrest.
Yeah, just Forrest. Yeah. What's up, man? Welcome back.
Man, how are you, man?
I'm good, man. It's another day in the trenches.
That's it.
So,
That's
yeah.
it. We've been in the trenches together this week, thankfully.
Yeah.
And this week it's a great week. We've been covering some incredible episodes, and I got to learn the day one that I got here that you're a trader as well.
Yeah.
One who's been full time for a very long time and trades personal accounts as well, right? Up to 7 figures.
Yep.
And you trade the volume profile.
I do. Yeah.
Right.
Yeah.
So where do you think it's best to begin? With this breakdown in terms of the strategy.
So it makes sense to, let's talk about what the volume profile is, right? So what is the VP? The volume profile tells us how many people transacted at a price. So at the bottom, we often think of volume across time. So we might have 9 a.m. and 10 a.m., right? So we're looking at volume into the open. The market opens at the middle part, 9:30 a.m., right? So at 9 a.m., you might have this much volume. And then at 10 a.m., maybe this is the 1 hour chart, we have this much volume, right? And so a lot of people will look at this change in volume and track volume deltas. But what if I asked a different question, right? Maybe we're trading NQ, right? So this is an NQ chart right now that we're looking at. And I said, hey, I don't really care how much volume was transacted at 10 a.m. What if I said, how many people transacted at 20,000, right? So maybe there's a price right here, and this is 20,000, right? Or if I said, how many people transacted at 18,000 ever? So not at 9 a.m., not at 10 a.m., across all of time. Or I might ask a different question. Maybe how many people transacted at 18,000 from the time period of 9 to 10 a.m. So it's a very different way to think of volume, but what it allows us to do is get intuition about which prices are stickier or more important than others.
Yeah.
And that's really, really key.
I mean, you can just say it's volume by price, right? Don't gotta go on this whole fucking minute long.
The volume profile. Another element of this is picking what your time ranges are, right? And so typically, if we get rid of this bottom part right here, right, I'm looking at the volume profile across multiple days and then also RTH. So RTH is going to be that 9:30 to 4 p.m.
Okay.
Right. And that's a key time frame every single day. And so every single day I'm looking at the market and I'm saying, okay, what is the volume profile going to look like within today's session? What is the story and the narrative of the auction for today?
Because when it's just the volume bars on just time, it's just showing every transaction throughout that time. So of course, if it's an hourly chart, for example, it's specific to that time window, so it still has relevant information, but because it's not specific to a price or the correlation between both, it becomes less precise of what you can do with that information, right? It gives you a time window that, okay, there's a lot of volume within this time period, but it doesn't really give you much to go on after that fact when in comparison to using both the price as well to understand exactly where orders are looking to at specific price levels with specific time levels. So that's why you start looking at volume profile.
Exactly. And so let's actually draw one, a VP right now. I'm going to do this sideways because we often talk of distributions. I just got a marker on my shirt. So you don't have to be a statistics nerd necessarily. A lot of people have probably heard of a normal distribution. So a normal distribution looks like this, right? And then there's like something called a standard deviation. So this is where most of the stuff is that you're measuring, and then there's a little over here.
Distribution.
Okay, and then there's a little over here. Okay, so imagine what we're measuring is volume across prices. Okay, and let's do our 20,000. So this is our price. This is 20,000. Okay, and then over here we have maybe 15,000, and up here we have 25,000. And what we're measuring is the volume. Let's imagine that this curve here is volume. So if we do a bar like this, and this is volume. So just looking at it, you can see, oh, most of the volume is around this 20,000 level.
Yeah.
And when we say volume, I think this is a key part of volume profile as well, is these are people. So when we talk about transactions and volume in general, these are actual people who are positioned here. And so what we can do is we can flip this around, knowing that most of the people are around 20,000. As a trader, we can get some really good intuition about what's important. So I'll actually draw this kind of how a chart, traditionally looks. So we'll have our prices on the right. Okay. We'll have our time on the bottom and whatever is on the left. So over here, I'm just going to do every 5,000. So we'll do 10,000. We'll do 15,000. And we'll do 20,000, and we'll do one more at 25,000. So it's 9 a.m. I'm looking at the markets, and we have a volume profile distribution. Let's just say it's 9 a.m. We have some overnight activity a little bit from EU, and we get a distribution that kind of looks like across a set of prices. What you'll get is a histogram or a bar chart that'll look like this. Okay, you get a bunch of bars.
Right, yeah.
Okay, and this is our vertical volume bars, right? And let's do it like this. So we've got our volume bars and we've got our prices. And let's say that the current price overnight is, let's use a different marker actually. Let's use some green. Actually, can I borrow that black one?
Cool.
That'll work. So we have some prices, and I know this isn't normal, and then it whipsaws in here, right? And the price is here. Something like that. Kind of a weird squiggle. And if I had to ask you, like, what set of prices are we most likely to be stuck into, it would make sense for us to be stuck around where people are, right?
Yeah.
That's why we kind of moved quickly higher, right? This is thinly traded between the 10,000 and the 15,000. And then we're getting stuck and we're consolidating inside of where there's a lot of volume. And what's important here is if we have this consolidation, it's very different if the story of the volume profile is perhaps like this. Let's imagine that we're consolidating now, but now the volume, there actually isn't a lot of volume there. It's all kind of thinly traded, right? You just have some bars like this.
Yeah.
So now none of these prices matter. And what's most likely to happen as a trader is when volume comes into the market, it's going to be a massive change in structure because none of these prices are sticky.
Hey guys, before we get into this incredible episode, I want to say a massive thank you for all of your support so far on both
That's
Word
not
Technology
true,
and
but
Chart Fanatics. We have grown immensely and are still the fastest growing channels in the trading
there's
industry. Now, a way to give
volume
back to every
comes to the
single one of you if you
market,
want
and it's just it's
profitable
imbalanced
strategy
and starts
completely
building
for free.
value there,
Go
right?
to chartfanatics.com, the link's in the description. Put your email in, and every single and your community have in there back to. But for now,
Or unsticky, and that goes into really what we call high value areas and low value areas, and that's how we determine that. The high value areas are literally just where the bars are the biggest, right, and the low value areas or skinny belly is where the bars are the lowest. And we expect prices to rip through low value, and we expect prices to seek out liquidity and actually seek out the high value areas, which is important as well, and to get stuck there once it gets there.
because that's why the reason why we can consolidate, even though we have high volume, because I can imagine for a lot of people at home, the misconception of like high volume means movement, when really high volume just means higher transactions. So when we're consolidating in a high volume price in an area, it's a lot of the time because there's a battle going on between the buyers and sellers. It's a higher volume pace. So we're seeing obviously more transactions take place, which doesn't necessarily mean we're going to move. We're going to see like a really big bullish move or bearish move. That can happen too. But if we are consolidating, it's nothing to say, oh, this isn't working, or like, I'm very confused. It's more so to understand that we still got all those transactions, but they're battling it out at the moment. And that's why we may see a consolidation alongside that increase of volume.
Yeah, definitely. And what you can start to kind of surmise across the day is, we have 9 a.m. We'll have the open. Let's actually just start with the open. Okay, so the market opens at 9:30 and it closes on the right side of our chart at 4 p.m. Eastern Standard Time. Of course, we're talking about. And let's try and figure out the story for a day. And let's imagine that we know that at 25,000, we could draw our volume profile anywhere. I did it on the left side. I might do it on the right side this time. So we know that there's a massive shelf up here. Now, the real VP tends to be higher resolution. You have a ton of bars. It's very jagged. We have
We're going to see it later, right?
Yep. We have a massive shelf up here. We have some very small nodes down here, very, very, very little value. And then we have another massive shelf down here, right? So the market opens today, right? We have some candlesticks that are forming like this. We get maybe a very high volume bottom wick. Then we get another candle next to it. It's another up candle, right? So we have up candle, do a little arrow for you. 2 up candles, and we're here. And maybe this is, ignore the time frames. We're pushing up into the edge of this node. What'll happen is when we get to the shelf, we have a trade idea now. And you'll see this especially, and there's a very good example I can show you here shortly on the weekly time frame where it looks very, very similar to this. When we get to this edge, there's nobody here above us. And so if you think about what moves the market, there are buy-side aggressors and sell-side aggressors, right? People often talk about buyers versus sellers, but it's really buyers versus buyers and sellers versus sellers. And whichever competition is more fierce moves the markets. So if the ferocity of the competition of buyers is bigger than the ferocity of the competition of sellers, the price goes up because there's more, the buyers are competing, right? So what happens here is that you run out of buy side. You just run out of people here. There's literally no one here.
Yeah.
Okay. So where is everybody? Well, it's very obvious. They're all down here. And so what happens is you get this down candle back into this range.
Yeah.
So that gives you a trade idea. Now, doesn't mean you're gonna stay in this range forever. Obviously, you'll break through. But when we do break through, it gives you this. We rip through these low prices until we get to the next shelf.
Yeah.
Right. So this low value area tends to be where we get the big kind of at the the ICT
Also,
area,
that
gap.
statement is not like what he just had here. Like, this is not true, right? Like, all this means is that no one has historically transacted here. There could be a fucking million orders in the order book in here right now. So like, this statement is like incorrect.
Right. So this low value area tends to be where we get the big kind of at the the ICT traders will call them fair value gaps and things like that that'll form, but they're big candles with low volume, right? The market's just moving very quickly. It's racing.
So in a sense, we've collected the volume from this area to take us to the next one. But in the interim, or in the middle, should I say, we're not really expecting the orders to come from there. And that's why we're not necessarily wanting to trade in this area versus when we recognize that we're reaching this area to the bottom of this no volume area, that can present a trade idea back into the volume area. And then potentially a trade idea could come from there to then try and take us there. But really, are you saying the higher probable setup is to trade within maybe the edge, but within the high volume areas?
So this is a great segue into the setups, right? So let's talk about that. There's a few kind of key levels that I look for every single day that I want to coincide with the volume profile, right? So the 4 key levels, guys, every single day are the overnight high. I'll just do overnight high, the overnight low. Whoops, it's terrible. Overnight high, overnight low, prior day high.
Yeah.
It's really hard to write and talk, by the way.
I know.
And prior day low. So 4 key levels. Why do these prices matter? Now, this is less volume profile. This is more auction market theory, but they go together.
Yeah.
So if we look at a day, any given day, and let's say the day looks like, this, and the market closes here. Okay. So we have the low of the day, the high of the day, and you have some other pivot there. The very last person to go long went long here, right? Someone went long here, and that person is in a lot of pain because we see that the market went down and it never got back to their price.
Yeah.
So what's going to happen is on the next day, when the market moves to their price, they're going to want to get out, right? Maybe not all of them. Maybe some of them will wait because they think the market's going to go in their favor.
Yeah.
But a lot of these people who are trapped are going to become sell-side aggressors. They're going to race to get out even. So as we get to here, as we approach this level, we'll actually start to see sell-side competition increase. So imagine if you combine that and you have confluence with a shelf, right? And so in terms of setups, it's looking at where the auction has confluence with these major shelves. And then the other aspect of that is the candles that we get. So if imagine that the market moves here and we get a massive candle with a top wick.
Mhm.
Okay, so we get a lot of volume here, top wick. So we crack this price, the last trapped along, I call it the last man. It's at a shelf. A ton of volume comes in once we touch the shelf to the downside. I know this is a green marker, but imagine that this is a down candle. We get a down candle at the edge and we sweep. That's a trade idea. So all of my executions rely on this idea of a high volume signal candle that has confluence with an edge and a higher time frame volume profile.
Right.
So I'm basically combining a little bit of technicals with what the auction is telling me of where people are actually positioned. The volume profile is telling us where people are positioned.
What time frame would you be looking at your volume profile?
So there's two major time frames. I would consider this to be like the weekly, right, or a higher time frame, so the weekly or the daily. And then my key levels are going to be on like.
Why did he write what the fuck?
Weekly time, it comes out to WTF. Yeah.
Oh.
So the weekly time frame, or
Probably 4 hour.
Should we
yeah,
D slash W?
down to the 2.
Yeah.
Yep. So the very best setups would be like this is a 4-hour candle. There was a good trade, and we'll talk about it in a second, where this was on the 1-hour chart.
Yeah.
But what's really, really important here is higher is better. What'll happen is, okay, if we get a bunch of candles, okay, and maybe like this, we get a really high volume bottom wick green candle, but let's say that this is the 1 minute, okay, and we're talking about volume. So intuitively, we can imagine, even if we see a relatively higher volume spike here, or even looking at the volume profile, we get a really big bar in the volume profile in the 1 minute here, it's still a 1 minute time frame, right? The very next minute could be like this, right? There's too much that could happen in that time frame. Where the inverse is very, very true as well. If, okay, we have an auction, and let's do a really high time frame. Let's say we get a nice, the market comes down like this, and then we get a huge high volume bottom wick on the weekly at an edge, okay? And this is actually what happened in the market right now. And then the market comes out of it like this. This market comes down, high volume bottom wick, comes up at the edge of a VP. That gives us that weekly kind of reversal that we're in right now. And that's an exact type of signal candle. A lot of people aren't looking at weekly candles for signal candles for trades.
Very cool, yeah.
But what's cool about this is you don't have to trade the weekly. You look at the weekly. I know, oh, the market bias is up. So now all of my executions, I should be looking for the long side, right? And I can still trade the 15 or whatever time frame people want to trade, but I'm using the volume profile to give me bias, right? And so if I if you held long after this weekly candle close long enough, you're green right now, right? Really simple.
Within this candle, though, if you've identified, so you're at the edge, you've identified your high value areas.
I mean, it's the same shit, right? Like the same. Anyone that trades profiles is probably doing the same thing. Like you have your profile. Oh, we've talked about like literally the very first video we ever put on YouTube was talking about this crap. Right, you're either trading like it coming back into the zone, or you're trading like the breakout of it, right? Inverse down here. Basically at the same 4 setups.
Once this candle is printed, you're looking for executions to then take you into this direct continuation.
I am looking for candles to close. This is a really important concept because what will happen is, let's do an example of what happens if you what I call front running a candle, right? And so we have a candle, and let's say it looks like this, and this is just a full body candle. It's green, right? And we're trading a 4-hour chart. Okay, and right now we are at 3 hours, 3.98 hours. It's about to close, and I'm like, hey, this is a signal. I should go long now. What happens in those last few minutes is this candle, like right here, turns into this candle. It gets smashed, right?
So crazy, right? The last few, like literally minutes.
And this happens to a lot of traders, not just on the 4-hour, it happens on the 15-minute, the 5-minute, whatever your time frame is. If you're looking for the candle for information, then you have to wait for it to close. You literally have to wait for it to close. It's a mistake that I made when I started. I see it in my community. I see a ton of people do it. They try to preempt the candle. And there's actually is some edge here. This kind of gets away from VP. If you watch how fast this candle changes in the last few minutes, the next candle is probably gonna do the same thing. This is like an FYI, the market repeats itself. And so you can start to anticipate these fast changes in the candle formation. But generally, if I'm looking for a signal, you have to wait for the signal. Imagine literally the candle has not finished printing yet. And one thing you can do is you can actually turn off the candle or indicators that you literally won't see the candle until it's done forming. That's a really cool trick that you can do as well.
That's interesting. That is really interesting.
Up to 6 million in futures funding. That's only possible at one place. Apex
Seems a bit
Trader Fund. You
needless.
can get up to 20 accounts at Apex. No
I need to go brush my teeth. This thing done or not? Or not? Or not?
other futures firm offers anything even close, and that is why Apex pays out the most out of any futures firm. Already have paid out over $500 million so far to traders just like you across the world. They're no stranger to the podcast or chart fanatics. We've had some of the record holders of largest payouts in prop firm history, obviously only through Apex, with Trader Kane, who did over $1.9 million in a single payout, and JCap, who's also done over $2
Dude,
million
actually, no, I'm not even gonna say
in a single
anything.
payout at Apex. Not only
I'm
can
gonna
we up
say
to 20
anything.
accounts, but also it's only a one-phase evaluation. There's no daily drawdown. Up to $25,000 of each payout is 100% yours to keep, and 90% profit split thereafter. And most of all, there's no profit cap. Now, don't forget, you can get a payout at Apex every 8 days. So you can get either the 25k account all the way up to the 300k account, and you can get up to 20 accounts. Now, make sure when you're getting an account at Apex, you use the code CF for up to 90% off at Apex Trader Funding. The link is in the description below. Use the code CF. Get up to $6 million in futures funding today. Now let's go back to the episode.
What's interesting as well is I think what happens to people is their assumption is I'm going to miss the trade and I'm going to get, even if it's an extra few points or a bit more by entering now versus waiting. And the other fear is that, okay, it closes here. I want to say enter here. Once if it doesn't pull back. So let me just enter now. So I don't have to worry. Next minute, it closes like this. Whole trade idea is actually not valid then.
Yeah.
And it
So what's
continues
the,
down.
and then you miss out. And I'll tell you something else in terms of drawdown with this. If you wait for the signal candle, you'll get something like this, right? So you'll get, let's say we have a candle that closes like this. This is our weekly candle, weekly time frame. We get a ton of volume. The market came into it like this, and we're expecting something like this. Okay. If I wait, it's very unlikely if this is a signal candle, an up candle, high volume up candle at an edge, this price here will never get retested. If you actually wait for it to close, it won't get retested. Now, these prices might get retested, right? We'll even see like 80% retest, especially on NQ. I trade NQ a lot. You'll see 80% retest of the wicks, and that's even a trade idea, really in the weeds. But if retest of this can become a trade idea, even though you're long biased, you know this is going to get retested. But this bottom price will never get retested. So what happens is your bracket is literally just I go long here because I get the signal. I go long here, and my stop is just here, and I'm willing to eat all of this as drawdown, expecting us to go way up here. On a weekly time frame, I mean, this is thousands of points at this point. So you can trade it like that. Like you said, you brought up a really good point. Some people might want to, get in down here long instead, expecting the retest. But what you'll see sometimes is a very bullish immediate reversal. I'll see on the 4-hour time frame, this candle closes, the very next candle, it just goes. And then the net, like it's out of here. You're like, whoa, even though it's a high time frame, like it's gone. So you have to,
especially when it's high time frame as well. And if that happens and you've waited for say a few weeks for that to position itself, then you hesitate looking for a perfect trade or a better trade for that pullback, and it just goes. Because that's why I think the characteristics of the pair or side of the industry that you're trading. So whether it's in this case, say your indices or your indexes, or whether it's gold or whether it's forex, like knowing the characteristics of that pair. So like you said here, you've noticed that NQ will just run. So when you notice that, being able to make sure you trade alongside those characteristics versus doing what you want price to do or how you want your trade to look. I mean, that happens to a lot of people, and a lot of it is based off like emotion in terms of I've waited so long for this trade. I want to make sure I get the maximized results from it. I don't want to have an entry here, for example, versus an entry here because this is, I don't know, let's say 100 points. Right. Well, on the grand scheme of things, as you said, this could be thousands of points. So what is it? Just 100-point difference? If you're looking for perfection versus being in a profitable trade.
And a lot of people struggle with the concept of accepting red. And I've heard traders too that good trades should.
Yeah, the thing about that is like, like when you wait for confirmation like this, look, I mean, I don't know. He keeps mentioning signal. I don't know what signal he's referring to, but whatever. Let's just say you have some signal that you're waiting for confirmation on. Like, yeah, sure, it might hurt you getting the ideal entry, but like the trade-off is increased probability of being correct. So
immediately, I like those trades better. I also know though, at least in my system, if I have a signal candle, there's an acceptable amount of drawdown. Again, I know that this price will never get retested or my thesis has failed. So I always trade my thesis. Anything in here, I'm accepting the wait. I will go to the lowers, right? I don't have to draw everything, but we could drill in to find a more optimal entry. I don't necessarily worry about having a perfect entry though, so long as I get in when I see the signal and the price is going to race.
Do you have a specific scenario where you might look for a sort of retrace entry?
Yes. So the classic example is really, get rid of all of these, is really anytime you have a really long wick on NQ. This is kind of subjective, but let's do a few different types of candles. We have a candle like that, right? It's like a wide body doji. You can get a small body doji, some long wicks, get a shooting star candle, or we might get a hammer candle, right? So a few of these are different types of candles that we'll get. Anytime you get a really extended wick like this in the market, intuitively you should think about the fact that within this time frame, the market, let's imagine that this is an up candle. Okay, this is an up candle. So the market opened here. Okay, at some point in opening, it raced all the way down here and closed up here. That's crazy. That's nuts, right? There was so much volatility versus the story of this candle. And say this is also an up candle. The market opened here, it went down, it went up, and it closed here, right? Very, very different stories about the volatility.
Calm and So
Yeah.
not much emotion behind and all volatility.
Exactly. So this is a very volatile candle.
Mhm.
And so if we think about the fact that that's volatile, what we can expect to happen in this next candle, even though this is an up candle, is we'll probably get something like this, right? It's going to retest this. And the VP, by the way, at the same time, I'll do a little VP for this, is you'll see that this is like low value and then it'll be like higher value over there. And so we have our histogram here. These are bars, right? We get our histogram, and you can literally see how people are positioned. And so the price will race through low value. It'll come back up to where it's sticky, and then it will continue higher.
Okay. So that's how you will then start to filter. Okay, this is where this particular candle close means I should look for a retracement entry versus just entering after the close. Versus the original example to the left, for example, might be one where you go, okay, this is where I'll enter, and not wait for a retracement because we can probably look to continue. It's interesting how that works, though, right? With the volatility, the interesting
My
thing is, no
fucking
doubt, that's the
throat,
handle where most people
man.
think if this is going to go without me, I need to get in.
Exactly.
When in reality, that's the one that pulls back.
And then they face the immediate red.
Yeah.
On a candle like this, you're almost always, if you long it, you're going to face immediate red. And then if you just have a lot of times we'll use like a 50 fib, and I eyeball this. I never use the fib tool, by the way. I'll just eyeball the middle, and then I know that's going to go between 50 to 80%. So I'm like, I'll just long inside this box,
Right.
and I'm good. Now, sometimes the market doesn't always behave the exact same way.
Mhm.
Sometimes it gets away from you, and you just don't make money or you miss out. That's fine. But yeah, I know it's going to test 50 to 80% of this, and I'll just put a limit long, and either I'll tap it to the tick. Like I've had some pretty cool days where it's like you get a tick perfect entry at the 50, or it comes down here a little bit. You do a little red, and then you're just green
Yeah.
for the rest of the day or the trade.
Because when you are just straight into the red, what ends up happening is you hold it. If you're lucky, you hold it and you keep holding it, you don't close it.
Yep.
But I say if you're lucky, it comes back to break even, then you close it.
Yeah.
And then it goes without you. And then normally what ends up happening is you either start chasing prices and longing higher up with a very skewed risk to reward, and more than likely you're probably not putting your stop here. You're probably putting it under some lower time frame low, which gets swept. Or worse is that because you then have missed the long, you start trying to short to long, meaning you try and short here, but price keeps pushing through, and you short here and it keeps pushing through, and that's how you end up blowing out an account.
And that's what happens to most people. They do the wrong thing at the exact right time because they're not thinking intuitively about. Again, all of this is really just thinking of where people are positioned,
Yeah.
right, and how they would behave in an auction, knowing that people want good prices.
Exactly.
People want to buy when prices are low. They freak out when they're really red. They get greedy when they're really green, or they want to race to exit.
Exactly.
And so that's really core to my system.
Is there anything else you look for here? Is it simply that the 50 to 80% fib you mark it out? Or is there anything specific that you need to see or would like seeing, maybe as an additional confluence, whether it's a lower time frame VP or particular candlesticks or particular level? Is there anything in that area that you look for?
So really, this is like one type of setup. So really, what I would prefer to see is if we modify the scenario a little bit. Let me see if I can draw this out well enough. Let's imagine that I use what's called a session VP, which it'll in real time draw the volume profile during as volume is coming in during the day.
Okay.
So let's imagine that in our VP we have some high value up here, okay, or maybe even a ton higher up here, right? And then we have some value down here, okay. So what I want to see is then we have some other bars like whatever throughout the day. So we've extended this long kind of bar into this shelf.
Yeah.
So all of my trades, like this was more of like talking technicals, but my actual trades that I would take full leverage on have to have confluence with a volume profile, what I call the edges, right? So these major nodes in the higher time frames, that's really what I'm looking for. Or what's likely to happen is I'll get some type of reaction, but because I'm in low value, technically there's no one here.
Yeah.
And where there aren't people is where you get the really weird barcoding and people really get chopped up. They're like, wait, why isn't my system working? And it's like, there's no one here. So the price is just, the market's doing true price discovery because there's no one competing where you're playing the game.
Yeah.
Versus here, the market's 100% going to react here, and it's 100% going to react here every single time. It has to, right? There's a massive amount of people. They're waiting.
Yeah.
They're waiting to take action because the price finally came back to them because they're super green, right? If they long down here, or if they're trapped, they got to get out. Like if it finally came back to them, they got to get out. So that's really key for no matter how many technicals you use. Without volume, you're missing a major part of the picture.
I love that. In terms of the volume profile, I know you trade.
I mean, he kind of
NQ,
just
as you said.
contradicts
Is this
himself,
something that-
right? Like,
I know.
oh shit.
These shelves, right? We might have another price higher here. It'll
Forex, for example, because confluence, whether it's a
well, it's a good point. Like if you're trading something that doesn't have volume,
Yeah.
this fails miserably.
size exchange.
Yeah, how many technicals you use without volume, you're missing a major part of the picture.
I love that. In terms
That them because they're super green, competing where you're playing the game.
Yeah.
Versus here, the market's
Like the
100% gonna
statement or
react
that
here.
he just described. Okay, like he said he gets in the trade here with the stop here. And then he described, now he goes on to describe how people up here are like hoping to get out. Or if they're doing what you just did, just to go long and now you're waiting to ride it all the way back up.
It's 100% going to react here every single time. It has to, right? There's a massive amount of people. They're waiting.
Yeah.
They're waiting to take action because the price finally came back to them because they're super green, right? If they long down here, or if they're trapped, they got to get out. Like if it finally came back to them, they got to get out. So that's really key for no matter how many technicals you use. Without volume, you're missing a major part of the picture.
I love that. In terms of the volume profile,
Guys
I know you
just-
trade,
guys just
NQ, as you
yapping.
say, but is this something that is universal that you could trade it across? I would say more the sort of futures side, maybe option side versus Forex, for example, because Forex doesn't have a centralized exchange.
Yeah,
It's
that's
a bit difficult to rely on the volume and the data.
it becomes pretty impossible actually. So I would say like I trade this with option, and I can actually show you what this looks like across the options chain.
Mhm.
So let's get rid of this really quickly. But that's a good point. Like if you're trading something that doesn't have volume,
Yeah.
this fails miserably. Right? You have to
True.
do something else. I don't trade forex, right? For that reason.
Most people don't.
So let's imagine you have some strikes.
And like not
We're
even
trading
just
at-
like that has like vol like yeah, like Forex doesn't have like a centralized order book or anything of that nature. But like, it has to have like a lot of volume, not just that it has volume. It's like sure you can have like a volume node, right? But if like the volume node is like 200 shares worth of like volume exchange, then you can't exactly rely on it to be particularly reliable.
SPX. Okay. And what's cool is most brokers, if you look at the option chain, have almost a volume profile built in for each strike. So we'll just do 5,000. Okay. And then I'm going to skip some prices. Let's just do 5,050, 5,100. And then we'll do 4,950. And what am I doing? 50. So 4,900. Okay.
Thankfully, I understand this better because we did an options masterclass here on Chart Fanatics.
Nice.
So now I understand strike prices and everything, which is great.
We'll do one more. So we'll do 4850 and 5150. Check that out, by the way.
Mhm.
So most broker tools, there's all these options Greeks up here. So we've got the Greeks, okay, for both sides, and these are calls. We call Greeks, so then you have put Greeks.
Yep.
Okay. And you'll also have this interesting column called open interest or OI.
Yeah.
And OI. Cool. And so the way that I like to visualize OI is as a bar, a volume bar. And so at 5150, we're gonna have a huge amount of OI. Okay. At 5100, we'll have half of that. At 5050, we've got like a sliver, and then on the put side, we're gonna have a sliver, a massive bar, and a massive bar.
Mhm.
So we're trading SPX. We're looking at the options interest. If we go up, okay, if the price starts to come up, okay, price is here. If price comes up, we should expect the underlying to react at the shelf, and it happens, especially when these are expiring. I ignored it. I didn't talk about expiration. Let's talk about what we're talking about today. There's every strike across all the different expirations. But if this is expiring today, I have to ask myself, if this is 100,000 open interest, that means that if this price goes through this, 100,000 people are going to be in the money. And you got to ask yourself, who is getting screwed in that situation, right? So what tends to happen, and that does happen, by the way, sometimes the market will move, it'll squeeze through these shelves, right? We might have another price higher here, and it'll actually race across the OI. It'll do this, and it'll bounce at the edge of the OI, right? But what will also happen is, if say it's 3 p.m., it's the end of the day, okay, it's 3 p.m., we get to this edge, what happens is all those premiums get killed. They get crushed because there's too much incentive for people holding the underlying, right? Or it doesn't matter on the call side or the put side, there's too much incentive for this to not go in the money at the end of the day. And so you'll see this get killed. And then what will happen is, after settlement open, after all these are dead, then your trade that you got crushed on completes, right? So the same concepts 100% apply on the OI. But the one thing with options is that you really have to look for exceptional levels of interest. A mistake that people make, especially in my community, is we'll end up with a day that kind of looks like this, and you'll get one that's like slightly higher.
Yeah.
But it's like the delta between these is not extreme enough for any of this to matter. I need if these are the bars,
You need like an outlier.
I need like this.
Yeah.
Now we're going to react at 49.50, right, on the downside, because there's a massive amount of interest there.
So don't get tricked into thinking just because we have an increased volatility across all prices, that's edge. In reality, the edge is actually found in having an outlier and having like a unique, observable amount of volume in comparison to everything else.
Exactly. And you did mention volume. So open interest is basically at open, what the open positions are. But intraday, you want to watch the volume as well, and you can also plot that as a histogram or a bar chart.
Got you.
And it's the same thing. But yeah, you really want to watch those deltas. So the main thing would be on like Friday, right? When it's OPEX, watch this. A lot of people fixate on this because they learn about it from me, and I'm like, guys, it's unless there's a large amount of contracts expiring or motivation, the market's not going to just reject every strike with interest. Like there are plenty of days where the market comes down and all these are just in the money, and those people just made money, but we don't know what, like, this could be a hedge, right? We don't necessarily know what the net result is.
Of course, yeah.
All I know is that 100% this happens, right? So you want to look for the outlier edges in the volume, right?
Definitely.
Let's take a break for a minute there, guys, because I want to tell you about the best CFD prop firm in the entire industry, Funded Next. Funded Next is a proud sponsor of Chart Fanatics, and they have been leading the CFD prop firm industry for many years, literally a top 3 prop firm. Now, why is that? Let me quickly just run through all the incredible things that they do. First off, they have challenges for every trader. Whatever you're looking for, they have. They have a 1-step challenge, they have 2-step challenges, and now industry-leading instant funding. You get on-demand payouts, you get instant access to funding, you get a no daily loss limit, and for every 10% you make on the account, it doubles your account size. Mind-blowing. Absolutely crazy. Now, let me tell you though, the trading conditions, they are the best in the market
still
when it comes to
going?
raw trade. They have into this back and stuff as well. And check scripts.
We've covered so far. Things that may be hurdles or things that you need to be aware of when trying to apply the volume profile and the concepts we've covered so far. It's not necessarily a bad thing. But in terms of pros, I think it really gives you a true insight into the auction, right? The buyers and sellers versus just relying on candlesticks and the technicals alone.
Yeah, so I'd say the first pro is it's not really a derivative indicator. So like if you think of what a candlestick is, it tells you where price was in a time frame, and it tells you how many at a price, right? For sure, 100%, right? There are other types of like cumulative like volume indicators that are more derivative, right? They're time based. Even like VWAP is like it's accumulating averages. This is just like how many people transacted at 5,000.
Yeah.
It's how many? I want to know, right? It tells you that. The other pro for this is that it's easy to see deltas,
Yeah.
right? And so if we talk about, you know, this bar versus this bar, like you don't even have to know. Yeah, you have never spoken to me. And you're like, hey, there's something happening. At this
Yeah,
price.
what's going on there?
What's going on there? Like, there's a lot of people at this price. Maybe I should pay attention, and you'll probably arrive where I've arrived eventually. So those are the two major pros. What's the third kind of?
You say it's fractal, so like you can use it. You're using it on a higher time frame, but you can use it on lower time frames as well.
It is fractal,
Mhm.
and the edges, like on intraday, will have confluence with higher time frame.
Mm.
So you'll see maybe within the regular trading session, you'll see a shelf, and then when you zoom out to like the daily, you're like, oh, that shelf is also the edge of the weekly. I thought there was a lot of people here. It actually turns out there's a lot of people here,
Yeah.
and that can give you extra edge and maybe leverage up in that trade, right? I believe in variable position sizing, so
Would
leverage
you
up.
say it's simple as well, in a sense?
It is simple.
In terms of like what we've covered, in terms of like here's what you look for, and here are your edges, and these are where you trade within, and then where you target, and then here's the no trade zone. So it kind of creates a very systematic approach in terms
does.
of where you're looking to enter, where you're looking to execute, where's of interest versus where's not of interest. And of course, simple doesn't mean easy, right? That's
Yeah,
I know
there
that
would
can
be-
be a misconception.
I can think of the other side of this immediately. So the con,
Yeah.
it is simple, but the thing with the volume profile, and I don't know if I can, we don't really have to match it, but the first con is that it's slow.
Mhm.
Okay, even if you're trading the volume profile on a lower time frame, it's slow because you need to, by definition, I need to wait for it to form
Mhm.
to have some intuition.
Yeah.
And I can't have a full distribution with one candle.
Yeah.
I need like multiple candles, right?
course, yeah.
So it's slow. Another con that I would say is you can have infinite overlapping. So kind of like it's fractal, but it's like
It's easy.
how
to,
many?
Yeah.
You know, it's like, wait, do I use the
Is that part of
1
your rules
hour?
then to only have specific time frames as you mentioned?
I try to get two time frames as far apart from each other. For example, you wouldn't want to trade on the 30 and then use the 1 hour for confluence. If you're trading on the
So
30,
close, yeah.
yeah, go to like, I know most people trade the 3, but go to the 3 hour. Like try to get as far away as
Mhm.
possible so that you actually have some, like the big ship moving the small ship.
This is the problem that if you go, let's say, weekly, daily, 4 hour, 1 hour, 30-minute, 15-minute, 5-minute, you're going to have conflicting within there. You'll find maybe 4 that are bullish, 2 that are bearish, 1 that's neutral. And the problem with that, 1 is very confusing. You don't know
Yep.
which one to go for. 2, if you have a bias that you have personally, you're going to try and align with whichever one matches that bias
Yeah.
versus which one makes the most sense and the market's telling you. Because I think I've been guilty of that so many times where I want to see price go up. Out of 10 time frames, majority say it's going to go down, but whichever one says it's going up, that's my one. That's like, yes, this is why I'm doing this, because it makes sense.
I'm right. Yeah.
Yeah.
Yeah. It's tough because it's slow and
Mhm.
you can look at a lot, but if you're doing it the right way, there's a low number of trades. And I think this is the thing that
It's
kills.
good and bad, this one, yeah.
Yeah, it kills new traders because like, especially across
It's
different.
exciting.
Yeah, it's not exciting, and I live stream in the morning. Everyone's like, "What's the trade right now?" Right, and I'm like, I don't have anything for you. Like, I would be making like I'm always willing to give like what I think will happen next, but I always give the disclaimer like this isn't a trade I would take because there's no signal candle. Like it doesn't meet all of the executions. You can get good. I would say another pro. Though,
Right, for the
yeah,
past 2
I guess.
days, we've been chilling here waiting, right? Until we get to these like lower levels or up here, it's like, who gives a fuck? Let all their retail traders sit here and get fucking wrecked. And then we hop in and get the real juice. That real
You'll
juice,
get good at
boy.
predicting chop. Okay,
Yeah.
which is a con as well because I can predict chop pretty well, kind of what the next chop is going to be, but it doesn't mean it's a good trade because chop tends to be less sticky
Mhm.
and it's more variable. But you can get better at predicting chop because right? If say you're chopping down here and there's a big bar up here, it's like it's going to chop into that.
Yeah.
Right. It has to. I don't know how long it'll take, but it's going to chop up to that next shelf.
Gotcha.
Right. So that's definitely a pro.
That's perfect. I think we can jump onto the chart and
Sure.
see some examples, right?
Let's do it. All right, so let's look at some examples that have played out recently.
Mhm.
This morning is a really good example. So I was talking about this morning how we were likely grind up higher due to the way that the VP was developing. So let's just go to the 15-minute. By the way, guys, use a replay tool if you haven't used TradingView before. It's super simple. It's a great tool. So let's just go to 9:30 a.m. and let's see what the volume profile looked like. So the indicator that I have on is called the Session Volume Profile HD. It is from settlement open, which is 6 p.m. Eastern Standard Time, to the close, which is 5 p.m. Eastern Standard Time. So 23 hours in the day. You can see here we had this strong green candle here at 8:30, right? And then we start to build value higher. We build this node here at the highs, which is very different than we can even see yesterday's high, right? The distribution here ended up being weighted very, very into the middle of this day,
Yeah.
right? So there's an immediate difference in the shape of the auction. So these prices, for whatever reason, it doesn't matter if they're long or short. I don't really think about that anymore, to be honest. I just know that there's people here. And
Yeah.
because there's people here, they're going to be playing the game. So my first question at this point in the day is, will this continue to build, or is it going to quickly reject? Because if this node gets big enough, it's a bullish signal. We're going to
Yeah.
continue this way because the auction is literally, it's moving away. Even though there's a large amount of people down here,
Mhm.
right, at these prices, the market's basically saying, hey, we're never coming back. We're just going to build enough value here.
Yeah.
It's going to start to go higher.
The auction moves.
Yep. And so what we can do is, and this is pre-market, we watch the candlesticks, and the node gets bigger. So at this point, I'm thinking, yo, it's 100%, we're going to go higher today.
Yeah.
And if I'm taking any longs, my stops are, down here at the edge of the node, right? You can do
Okay.
right at the edge of the node, and then your TP is going to be, wherever it is. I need to go to a higher time frame to see where the shelf is. But you can play this
So
out.
you're looking for the same way you say you stop, you're saying your TP to a shelf, like to an area where the nodes are reducing, the auctions leaving
Yep.
or dying off.
Edge to edge. That's why I call it the volume profile edges. Yeah, for that exact reason. I'm literally just expecting it to traverse all of the players in a node.
Mhm.
And once you run out of people, it's likely going to reject. And then specifically today, because it's a Friday, I wasn't expecting I was looking at, we talked about OI earlier.
Yeah.
There wasn't enough really juice. So this ended up pinning, or what we call pinning, kind of higher. So that's an example just from today, what we call it's not really a P-shaped volume profile, but looking at trending price action on the volume profile. If we go to the 1 hour, there's another example, I think from Monday, if I recall. Yeah, this is an interesting trade here. There's a few here that we could talk about, but let's talk about this 1 hour close here at 1300. So we'll go back in time, select the bar, and let's talk about the key levels. So I mentioned there's 4 key areas that I care about: prior day high,
Oh my
prior day low,
God.
overnight high, and overnight low. So this overnight low got taken out here. Overnight high, actually, we got to talk about this first. This is an actual trade I took. I totally forgot about this. Sorry.
That's no
All right, so we have overnight high, or sorry, prior day high. Let's do PDH, and we have prior day low, or overnight low, overnight low. Cool. 2 key levels. Cool. We don't have the higher time frame VP on, but what I really want to care about is what's the shape of the session volume profile here, and what kind of candles form around what the auction is telling us.
Yeah.
So we'll go ahead and move forward in time a little bit. We get a print on the 1 hour. We get a high volume top wick candle into the auction. Now, I know, because I trade level to level, that this at least is going to go to overnight low.
Yeah.
We got, again, a signal candle at the high, at the edge, alpha key level. This is a pretty tight trade here. I'm looking at the prior day volume profile as well. I can also overlay this visible range here. And I can see that there's a shelf down here, essentially.
Correct.
Right. So this other indicator shows me the volume profile across whatever's on my screen, visible range. And so,
show any price that's on the screen, it's going to show you all of that volume.
exactly.
Versus these are the specific days, is it?
Yep. So this is session by session, and then this is everything on my screen. So you can see it, change as I do that.
Got you.
But let's imagine I go short here, right? And I did, and then I do a TP, and maybe I want a TP at the edge of the shelf, right?
Mhm.
Safe TP would be overnight low, but we come down there, and let's see how close we get to that. We go through, wicks right off of this edge here, right? And then if we continue to go forward in time for our next signal candle, we swept this price. We got it's a lower volume bottom wick, but we got a green bar. Another key thing, this isn't really related to volume, but just like the story of every day, you're very unlikely to sweep a prior day high and a low
In the same.
in the same session.
Yeah.
It's extremely unlikely unless you have like a huge break in structure. So because we swept prior day high, even though we ran lower, it's extremely unlikely we sweep prior day low. So as soon as I see this weakness and change, I know that I can do a mean reversion back into, maybe the point of control, right? So I'll go back a little bit, 1 bar, I go long, right? I do my TP at the point of control, which is in the volume profile. It's just the price with the most amount of volume,
Yeah.
right? And so we go forward in time, okay? And it goes a little bit higher, but who cares? I got my money on my trade. So those are 2 very kind of simple examples from the last 7 days or so.
Definitely. Well, the thing I love, as we talked about in terms of simplicity, not to mistake again for easy, but simplicity meaning that this one way of observing the market, when you understand it and you're able to then see it in the market day to day, provide you everything you need from where to execute, where not to trade, where best to trade, where to target. And I think those are a lot of the problems, or they solve, a lot of the problems that a lot of traders face, because they may have a good entry system, but they don't have the management, the target, the where not to trade, for example, or they have the good target, they don't have the entry. So this, you can see, incorporates all of those into one system. Just one question though off the back of it, looking at it now on the charts.
Sure.
How much of a process would you say for someone new looking to use volume profile? How much of a process would you say there is to really picking it up, really training the eyes? What's the realistic, not maybe time frame, but what's the realistic journey look like?
I think in general for a trader, like if you're really good, it's going to take you, the fastest I've seen someone get profitable is 18 months. And that's just fast in general. It took me years, just to be candid. Like I suck. It took me
That's
years to
slow
get
as
profitable.
fuck.
I think for the volume profile, the hardest thing about this is that
What is with those monitors
Yeah,
turning
I
off?
went back days here to show you like good examples. And one of the toughest parts about my system that I've been feeling too is because there's a low number of trades. If you're waiting,
The thing is, it's kind of really talk about like the value area high and lows of this stuff, right? If someone like is really new, you want to actually sit here like visualize this stuff, just like turn this on, right? And just kind of start formulating trades around that. But obviously, keep in mind that it changes as price is developing, but because like he's just talking about like the nodes specifically, but like you can get like the value area high and value area low for like all the nodes accounted for.
signal candle to form. And I notice in this very high VIX environment, you don't always get that. So I've been trading more around just the shape itself than anything else. Here's a good example of a volume profile shape that we got here. This is what we call P shape, right? It's literally just shaped like the letter P. So this is kind of a
Yeah.
bullish.
The
right? The
P-shaped
option pushed higher and
boy.
accumulated higher, and so we expect that continuation higher,
Mhm.
right? Which is basically what we got. We get rid of this. The replay there, you can see that's exactly what we got. P-shaped close.
Push
It
higher.
did chop a little bit.
Yeah.
Market push higher, and then the inverse of that is what we call B-shaped volume profile.
Mhm.
But you can trade just with that. It's really hard for new traders to just trust the VP and not look at the candles.
Yeah.
I've tried even trading without the candles and just using the VP. It's hard.
Hmm.
It is much harder, but that's how you get intuition about the prices.
Of
So
course. Would you say, is there anything to the previous volume profiles in terms of, let's say, like here, we pushed 3-4 days, and you can see that the point of control, you can see where the auctions were for those days, and we see this push down and this sweep, if you will, before seeing the momentum kick back in. Is there anything from those previous profiles that help for a move like that at all?
100%. So in general, there's really two setups that we have. So I have mean reversion trades of various sorts, but there's also a previous POC retest trade. And so this is one of the key trades that I teach people is we're in an uptrend. All right. And we know that the market doesn't just go vertical. It always comes back. The question is, where does it come back to?
Yeah.
Right. And so conveniently, there is this price from yesterday where most of the people are positioned.
Yeah.
It's a
Right?
naked
So if I
point of
happen to be a
control.
betting man, which I am,
Yeah, of course.
and I'm like, what price is going to get retested for a liquidity grab? It's probably going to be the price with the most amount of people.
Yeah.
And so if we look to go long here, right, and then I'm just going to TP, assuming we're in an uptrend, we're going to crack the highs. Previous POC retest is our playbook trade, right? And it doesn't even matter how long this takes. Like this is such a bread and butter trade for me that you'll take it every time. What people struggle with this is holding it, right? This is a 1 hour chart, right? So this was 5 hours to get out of this trade, which for a lot of newbies they're looking for minutes.
It's going to be difficult.
That's 1 day, but it's still 5 hours,
Mhm.
right? But
Definitely.
it works across multiple time frames.
Love that for us.
Okay, so we're gonna look at some examples of the volume profile and how trading at the edges of the VP or just the edges of the
So
auction.
the thing you didn't talk about is
such a
like the
powerful-
tracking value, right? It's how value is changing over time in like sequential profiles. Like is the POC rising session to session, etc. Plus like the whole outside day setup and inside days. There's a lot more nuance to this than like what's being discussed in this podcast. By the end of the day, this is like what, an hour long episode. Can't expect them to give you the whole spiel on profiles in like 30 minutes.
powerful entry model.
I best just read the
Let's
books.
take a break for a minute there, guys, because I want to tell you about our incredible sponsor, TradeZella. TradeZella is the #1 trading tool in the entire trading industry. TradeZella and you.
I'm on almost ES futures. Okay, I trade ES and NQ futures, and there are a few key things that I want to call out on my chart right now. So first and foremost, I'm on the 4 hour chart. I trade specifically on the 1 hour, 4 hour daily time frames. I don't really go lower than the 1 hour. For the style of trading that I trade, I am a day trader, but I do a lot of like intraday swings. My average hold time is like 4 to 5 hours, and I often will hold trades even overnight. Okay, so a lot of swing trading in this model. There's a few things I want to call out here. Okay, in the volume profile, right? We can see that there's a massive amount of participation right here. This is where people are based. Okay, so I'm interested in folks' basis. Okay, where people are positioned matters. Okay, and really we want to enter at the extremes of these positions. Okay, this is really at the core of VPE. There's a lot that we could reason about, argue about, debate about in the middle of participation. But at the edges of the extremes, you can also almost think of it like in science, where we're just removing variables. Okay, we want as few variables as possible. Okay, on day trades, we actually simplify this even further. Okay, when we talk about day trading, there's only 4 areas: where it's Friday high, okay, Friday low, overnight high, and overnight low. Okay, those are the 4 areas where I even look to enter a trade, and then I look for confluence with the volume profile. For now, though, we're gonna stick on this 4 hour time frame. Okay, and what we want to do is, this is an event that a lot of you probably remember. This day coming up here, there's the edge of the auction here. There's a low value area. Okay, right below this thing I marked in red down here. Okay, an area of low value, lower participation. There's a previous low here, previous low here, previous low here, and then another big auction down here. We actually have this auction and this auction here, right? So all of this is also kind of a shelf. So if you look at where, if we split the volume here temporally, okay, just over time, we can see how all this volume above, all of this here, really started after this point in time here, once we broke these highs. Okay, I'll show that to you separately. So once we passed, we do a little cross section here, boom, boom. Okay, all of this node happened after, let's just call it September 4th, 2025. So a lot of volume has been built since September 4th in particular. Okay, now because we're interested in where people are positioned, when we have an event like maybe this, okay, the question is, where are we going to go? So let's go back just a little bit. What makes sense from a participation perspective for this to bounce? We don't want to catch a knife, okay? We could short, obviously we're at the end of an auction here. We could see that we just range across all this participation, right? We cleaned up all these players here. Maybe you had a thesis short. We're not going to even talk about the short here. What I'm really concerned with is, where do I long? Okay, there's a few areas where the VP might tell us to long. Okay, I might try long here at, let's get rid of that thing. I'll try long right here. Okay, but what I'm going to actually do is I'm going to long once we sweep, we clean up this entire edge here. Once we sweep this edge, okay, in the volume profile edges, we're trading the volume profile edges, the VPE system, and we're looking for confluence with clear edges in the market. that is where we're going to get the highest probability outcomes. Okay, trading is like poker, but unlike poker, we can just wait until we're dealt a good hand without having to pay to play. You don't have to pay to get dealt another card of hands in the markets. You can just wait. You can literally do nothing. So I'm going to do nothing. Market sells off. We sweep that edge. We'll go ahead and buy. Let's do a market buy. Okay, we'll get in. So we get it. Now, my TP is going to be based off of the volume profile. Okay, so I could look for either a small intermediate bounce up to 67.21, okay, where we traverse the node. We always look for a node traversal for our take profits, right? Assuming we're still in an uptrend. Okay, I'm always looking for a node traversal, or I could go all the way up to here. So let's do something a little conservative, maybe a little skittish, put our TP right there. And my stop loss, we're going to do the same thing. Okay, we're going to assume that we're not going to traverse this other node. I can make it tighter and put it right here, maybe outside of here, but we might sweep this edge as well. So I'm going to assume that at worst case scenario, we do that. So this is like a 1 to 3, okay, risking 1 to make 3 on a pretty big time frame here. So let's see what happened. We'll go forward. It swept this edge, okay, and after cleaning up that last little bit of participation, it dips down into this node a little bit, and eventually we hit our TP there, okay? So a good example of using the volume profile for taking trades. Now, obviously, if we go back one more time, we can see how trade management is also key. So I went for a sweep of this edge. There was another key edge here, which would be the A edge, I would say, right? In terms of confluence, we always want to ask ourselves, is there an edge that lines up with a node? So this edge is actually beyond this node. If we look at this edge right here, it's in the low value area. So we crack it, but we crack it in low value. The edge that's really has a very, very clean alignment with the node is actually the edge over here, and that's where we bounced. And so a better way to take this trade, again, would actually be to wait for that little sweep. Okay, we got the sweep. Then you take the long. Okay, then we can do the same thing. Okay, we'll go for the traversal of the node, and our stop loss now is still the other side of this node. So now we're really using the VP for our entry model. We'll get in, okay, comes up, make a decent chunk of change, not a bad little trade. Okay, and that trade took about, what is that, 5 days. Okay, 5 days, make a couple $1,000s, not a bad trade. Pretty kind of standard trade in the VPE system. So that's what it looks like on the intermediate time frames. Let's see if we can look and find just a very simple day trade example. So what I'm going to do here, for our day trades, we look for, is very, very simple for our day trades. I'll write the model out for us. Okay, we look for a signal candle at an edge, and we look for the candle to be in the direction of the trade. Look for candle to be in the direction of the trade. Okay, and then the third thing here is we hold until the next edge. Okay, so what I mean, this is a trade that I took very recently, actually. Okay, as a short here. So we're on the 4-hour chart. Boom, boom, we'll go here. Awesome. So there's a very apparent edge on the chart. We have these previous highs. Where is my arrow tool? Okay, the previous highs here. Okay.
How long is up in this shit?
I want us to sweep these highs. So once we sweep these highs, I'll look. Now this is a really key thing here. We don't just take trades at the edges. We want confirmation that this is actually going to do some type of mean reversion or retracement. Okay, a lot of my playbook trades, there's 2 playbook trades that I do. This is one that I show you. The other one is prior POC retest. But nonetheless, once we pass this, I'll just look for a trade. Cool. So we get a candle, and I said we want a signal candle. Well, the signal candles in the VPE system, they're very, very simple. And you're all going to be surprised at how simple the system is. It is a relatively higher volume doji, shooting star, or hammer candle, okay, in the direction of the trade. So this is a doji. It's higher volume than the previous candle, relatively higher volume. So relatively higher volume, this is an important definition here, means it's higher volume than the previous candle. It doesn't mean it's a high-ish volume candle relative to a bunch of other candles. It means it's higher volume than the previous candle at an edge, and it's one of these candles in the direction of the trade. I want to short into the mean. In this case, when I talk about mean reversion, we're shorting into the auction. We're shorting into participation. There's a large block of participation here. Let's get rid of this little square. Let's add another square. Okay, we want to short into participation here. Okay, that's what we're looking for. If we add our session volume profile as well, okay, we'll get rid of our visible range volume profile really quickly, and we can see where people are positioned intra-session. This is really, really important because traversing this auction where people are positioned and then the relative strength of those positions is exactly how I trade in my entire trading system. So we'll go short here. Let's just go back a bar. Okay, we'll go short. Okay, we'll go short. We'll just mark it in. Cool. Now, where do I want to take my TP? Well, we want to trade edge to edge. There's a few different edges here. First, let's put our stop. Okay, the thesis is that we're not going to break the high of the candle. We did the sweep, so the market should not go higher before it rotates and traverses the auction to a degree. We have the overnight low, and there's a prior day low. Now, the 4 areas that I called out for day trades were prior day low, overnight high, overnight high. In this case, I'm going to go, because there's a large amount of participation lower, I'm going to go for that prior day low. Okay, prior day low, it's right down here. We'll hit confirm. Okay, this is that prior day low level. Do an option J. Okay, and we'll label this as, it's not going to let me label it by clicking it. Let's do PDL for prior day low. So we're going to go for that prior day low. Now, the entry on this is Friday. Okay, it's the 10 o'clock 4-hour candle. For those of you who follow me, you know that the 10 and 2 o'clock are like the times I look to trade, right? Because those are 4-hour candles. That's the primary time frame I trade. If I don't have a trade there, I'm usually doing nothing most of the time, which is great because I don't want to be on my desk all day anyways. Got a company to run. So let's see what happens, okay? We go a little bit red, still red, okay? Comes down a little bit, boom, look at that, hits the prior day low. Why does this happen? Okay, the reason that this happens is very, very novel, and it's something everyone understands, but they don't think about and use when they're actually trading. Instead, they overcomplicate it. We care about where people are positioned. Without the volume profile, we know where people are positioned. We know that they're positioned somewhere in this candlesticks. What we're missing is how many people are positioned there. Okay, are most of the people positioned here? Or are most of the people positioned here? Or are they positioned here or here? And on which days? This is really, really, really critical, because when we know where people are positioned, we know when they have to make a decision. Okay, just like you freak out when your 50K prop account starts to approach your intraday trailing or whatever, right? Or your entry, you start to freak out. The hedge funds and all these players that you think run the markets do the exact same thing. Okay, the guy with the $10 million entry freaks out at the exact same time as you. And the reason he freaks out, I'll show you right here, is because when he gets this candle, okay, he goes long, right? And let's emulate a hedge fund, okay? So he goes long with, I don't know, 1,000 contracts.
Ugh.
And he's like, cool, I can't wait to do something. Oh, crap, I'm immediately red. So he's trapped long, okay? And he is going to, once the market comes back to him, want to do something about his trade, right?
Oh
And when the
my
market finally
gosh.
comes back to him, they are going to be sell-side aggressors. So all the people who bought up here are going to become sell-side aggressors. If we go back and we look at the low that we swept, okay, right down here, and this is going to be a little hard to do on the replay, so let's go to this candle. All right, well, we actually need a lower time frame. If they went short here, okay, that means every subsequent candle after going short here, the market's going up, they're red. They're red for this entire part of the trade. And then once we get back to them, once we sweep this price, we clean these people up, they become buy-side aggressors. Okay, they're marketing out of their positions. And the reason that they're doing that is that some of them are waiting to go break even, and some of them are getting antsy, just like you do. And they're gonna go, well, maybe I won't get break even. Maybe I should get out now. So they start hitting that market. And whether it's the full position or individual lots, tranches in the position, they're doing that. So that psychology exists across every single time frame, every player in the market. People aren't nearly as sophisticated as we think they are. And we know that because we can just observe the market and see what happens around the extremes of people's positions, right? We know, again, that people have to react. We just saw it right here. Okay, we swept this low. Okay, we put in, after sweeping this, the Monday low, the market is coming up a little bit. Now it's ranging right now. But before FOMC, which is in about an hour, you can basically anticipate that it's going to mean revert back into here. Not to mention, I haven't talked about it in this video, the session volume profiles themselves. Okay, we have two sessions, POCs, stacked right here, 68.57, and some change, right? This session's POC and this session's point of control, right on top of each other. Most of the people for these 2 days exist right here. I'll say it again, it's really, really key. Most of the people for these 2 days exist right here, and that's why it's really powerful. So let's go ahead and see if we can find a few other examples of high volume signal candles at the edges of the auction. And we'll go back a bit to where we were just very clearly maybe uptrending or something like that, right? We'll look at some previous VAL retest as well. Okay, so here's a good example. This is a different model or different entry in the VPE model, but it's something that we talk about quite a bit in our community. Okay, so this is the concept of just trading the auction and looking for these node traversals. So the market's in an uptrend overall. We know through observation that prior day VAL is a great entry long. Why? Okay, so let's get rid of the visible range VP and let's just talk about what we're actually looking at here. Okay, so the volume profile itself is a purple line, there's another purple line, there's a red line. Between the two purple lines is 70% of the participation. That's where most of the people are. At the point of control is the actual price where literally most of the people are. So 70% of the people are between these purple lines, and then most of the people are at the red line. Okay, so one standard deviation is 68%. You don't have to
The
use
thing about this is like,
essentially one.
sure, and some extremely strict fundamental view of profiles, yes, that statement is like somewhat true, but like just ignoring so much data, right? Like if you're just blindly taking longs at the previous day value area low, just because it's a previous day value area low and you're retracing into it, like not very high. Like the you take that trade 1,000 times, not going to be some like super optimal win rate, right? If you're just blindly taking it like that.
Standard deviation of people. So if I had to ask myself, okay, tomorrow, where is the market most likely to interact? It's most likely to interact where people are positioned. Why? Because of what I said earlier. People have to make decisions at their basis. They do. They freak out. Either they're going to double down, they're going to, which will be aggressive on one side, or they're going to get out and get skittish. So generally, you can expect this area, okay, between the VAL and VH to get interacted with in your trending markets. Okay, we should not see too much interaction below because there's not too much volume below, right? Within this horizontal histogram, which is just a blind profile. Cool. So let's just play that out. Okay, and instead of doing 4-hour bars, let's do 1 hour. Okay, so the market does a thing, comes up. Okay, and you can see here how if you would have longed right here, let's actually just go back a little bit. Let's imagine you go long right here. You're like, cool, I am super confident. This thing is going straight up overnight. We're just gonna go long. So we go long. Dope. We're green. We're really freaking green. Oh no. Oh no. I'm freaking out. I'm freaking out. But look where it comes to. Look where it finds. Okay, participation. Okay, it finds participation in this previous session at the VAL. This is where all the people yesterday participated. Okay, and then after interacting with that, it continues doing what it's doing. So instead of just immediately taking that long, okay, in this uptrend, what you can do is, right, you can just wait. Okay, we'll go back to the bar. And you can say, you know what, I know in an uptrend, I want to long BAL. This is our trade plan. Okay. I want to long BAL or do nothing. Right? And this is how I trade in VPE. So it's going, it's going, it's going, it's going. All right, cool. Hit my VAL, we'll go long. Okay, I'll put my stop. It should not go really below yesterday's overnight and TP. We're in an uptrend. I should be able to go for the highs. Okay, I should. Right? It goes boom, 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 boom. Easy money. So there's no reason, by the way, in a trending market not to go for the highs for your TP. If you are, right, if you're doing something else, then you literally don't trust what you're seeing on the charts. You don't trust this direction uptrend. You should change your thesis. Okay, so that's a very, very simple example there. Let's go to the monthly. I want to show you some magic on the monthly chart for the VP of why the system is so magic. Okay, and you can kind of see my marks for extensions higher, and you know we've hit those. So let's add our visible range back. Okay, so back at this time, okay, the market is
Am I just locking
coming
this?
off, okay, at some point, and we have to ask ourselves, where is it most likely to bounce? Okay, it's actually not going to show me the VP on that time frame, about 24 hours for this to load. So as we let the VP load, we need to ask ourselves, where is it most likely to bounce? Well, there's a huge amount of participation here. Everyone's watching the news or looking at the tweets that are coming out. They're trying to figure out what's going on. I'm thinking I want to long after we sweep these lows, okay, and get close to this bracket here. It doesn't have to be perfect because this is a massive range. I'm going for all-time highs. This is 1,100 points on ES, by the way. Okay, it's $50 a point. So the market's coming down. Okay, let's change this to 4 hours again, just so we're not waiting forever. Okay, market comes down. Boom. We get in there. We'll go long. Okay, and my TP should just be at the highs. Okay, unless I think we're going to start downtrending, and I'll just put it down there. Okay, that's a pretty fat bracket, but it's no different than trading on the daily or any other time frame, right? And then we let it play out. You can see that we're up 24 Gs. You know, it's raining, it's choppy, and there's a whole story of what's going to happen as we reapproach all-time highs on ES here. But this is just one contract, and I imagine most of you haven't made this amount of money trading 15 contracts in whatever you're trading. This is a trade. Okay, this is just one trade, trading the volume profile, looking for that bounce out of participation because we know that people are positioned there. Nice 64 Gs. So that's how we trade the volume profile. I did not get that 1,100 points on ES. I have, though, managed on NQ, trading the system, catching 2 1,000-point trades on the upside here, which is cool, in addition to a few other trades that I've taken. So that is my system in a nutshell. That's my system in a nutshell. Thanks for watching, and yeah, shout out to Riz for do a different outro.
Typical
So that's
shit.
the VPE model in a nutshell. Thanks for watching.
First of all, it's been an absolute pleasure to break this down.
Typical shit. As expected, not a whole lot to learn there. Shout out to that guy though. What's going on in the order book? Out to the volume profile. Yeah, but I mean, if you really want to nerd out on that stuff, like, go read the Jim Dalton books. Funnily enough, there's actually another. I'd originally thought that guy was the guy that made the TPOs. He was the colleague of the guy that made it, and that guy has like an even older book. What's his name? Something with an S. Yes, Steidlmayer. Bum, bum, bum. But it's interesting that no one in any of these videos uses the TPO, right? Bunch of fucking noobs. I swear to God. Bum, 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 bum. How's everything else to do in the futures world? Bum, 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 bum. I'll leave this like this for now. I'm gonna go to sleep. I'm just like, that cough medicine did not help. I'm trying to be awake for CPI. Like wide awake way beforehand, because I need to figure out what I'm doing with some of these trades, if I want to take them or not. Okay, okay. Close this shit. Put this thingity thing back here. I close my tab again. Fuck. Six, 6, 8. 6, 6, 8. Down. I mean, this whole move up is just like squeezing out late shorts. Like open interest is like nuking right now on this whole move. And like this node ends like right, there's like volume clusters like right there at the golden pocket too. Blah blah blah. I hate how they change this shit to do this. It's so fucking annoying. I don't know. The one is gonna do it. Yeah, like. And the auto extends. This thing done? This thing done or nah? Or nah? Goddamn. But the other crazy thing about this is how long these things can just go on like self-directed coding shit. Especially when you prompt it to like if you come up with anything interesting to do, like feel free to implement it. And it just goes on a fucking rant, like a coding spree, right? This thing is just going. Okay. Okay. Hmm. I think we're done with all those videos though, right? We're done with all the videos, at least in terms of that channel. Yeah, because there's one more, but it's like about algo trading. It's not particularly interesting. It's like I already watched it, and I don't care to watch it again on stream. But it's like super basic. It's like very intro level. It's like a guy using like a no-code solution to algo trade. Essentially just like shilling the software. I mean, I guess it's pretty interesting if you want to delve into that world. Boom, 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 boom. My throat is hurting. I might go to bed, to be honest. I feel like I'm breathing through a straw right now. Also, is it a holiday Monday in the US? It is. It's a banking holiday. Also, we have next week FOMC meeting at minutes. The rest of this month looking like. Need more water. Need more Molly Owata. Okay, okay. Okay, any questions or nah? Or nah? Or nah? I'm about to pop this magnesium and get ready to go to bed. We'll read for like 30 minutes, an hour, and just call it a night. I'm not feeling too hot. Akimbo magnesium. Or nah? Or nah? Oh man. I better not wake up sick tomorrow. I'm gonna be tight. Boy, I'm gonna be tight. In terms of the juice box, though, I mean, nothing really changed, right? Nothing has really changed at this point. Kind of just looking a little sus, right? Kind of building value lower and lower. Ideally, we would have reclaimed this range up here. Like, the fact that we kind of failed this is pretty weak, right? Yeet. And now we're starting to lose this one too, potentially. But we'll see, right? Can we kind of flip this thing and start going? Or not? Or not? Or not? Or not? We're just ready to be up. And we're starting to lose the view about off the low, right? And like bouncing. Now we're just smacking that dying. Other should we make this? Does this reset as well? So it's just the volume profile, the fixed range volume profile. It's busted. Interesting. I think we talked about all this though, right? We didn't talk about this perhaps. Just gotta look at this real quick actually. We definitely talk about these ones, so none of that has changed by show. And all this stuff's like in the Discord, all these like boxed zones that we talked about previously. The boxes are still here, trying to take the screenshots to make the posts, all the way up to here, right? And even these ones. So we've been talking about all this stuff well ahead of time. So if you really want to go read the Discord for like, all the context on that. And in terms of this lower time frame stuff, kind of already been talking about it earlier this week. Earlier today, we talked about this kind of zone, right? The naked point of control up here at the golden pocket. Is this just trading view? Like, I can't tell. It is. Something is up with TradingView's computer. I don't know what's going on. It's like flickering, and sometimes the screen turns off. But the screen turning off, I can't tell if it's TradingView or not. But the flickering is definitely only on TradingView. Anyways, yeah, low time frame scalp potentially here. Although there's a lot more going on up here, right? Just be careful, right? Manage risk, stop loss, break even, etc., as per usual. How's this stuff doing? Almost there. And to the downside, nothing has changed. Literally nothing has changed to the downside. So not a whole lot to happen out there. There's no real need for a juice box. You just keep these two zones in mind. But I'm out here. I'm on my throat. Rest. Try and get like a nice long sleep. But I didn't sleep that well last night either. I was like waking up. Actually, now I think I was probably starting to get like more and more sick last night. Cause I woke up twice and like sweat. My bed was like damp. I forgot that even happened. Anyways. Back at it again tomorrow. Probably do like a longer stream. Either like tomorrow or on the weekend. Kind of just catch up on things. Look through a bit more of these charts, a bit more in depth. For now, I think we're gonna rest. Take it easy. We'll always end the day. Not much of a chat shutter, right? Ain't no chat here. Shout out to me. That's me putting in that work even when we're sick. Putting in them extra hours, you already fucking know. Shout out to our Codex and Opus 4.6 for just coding this whole time. Getting shit done for us. We will be back again tomorrow. Till then, I'm out of here. Later. Later. Later.